Welcome to Ask an Actuary, the series where we demystify complex financial concepts with the help of our industry experts here at Odyssey. Today, we're diving into the world of other post employment benefits, or more commonly known as OPEB. Despite their reputation for being complex, with the right guidance and data, these valuations can actually be a breeze. Joining me today is Samantha Schneider, actuarial consultant here at Odyssey Advisors. Thanks for joining us.
Thanks for having me.
To start off, can you explain why OPEB valuations are often seen as complex and what misconceptions people might have about it?
Yeah, I do think that there is some complexity behind an OPEB valuation, especially because there's kind of a lot going on behind the scenes, and especially because it's math and statistics, which, let's be honest, most people just, that's an automatic, my brain is going to turn off. So, it is complex in what we're doing, but what you're seeing is also a 60, 70 page report that we're releasing where a lot of that doesn't actually necessarily matter to you as much. It's more for your auditors. Again, it's background stuff. So yes, there is a big report, and yes, it's very complex what's going into it, but the things that, as a municipality that you have to focus on are actually not that complicated. There's really only a few things that you need to know. And so I think part of what makes people afraid and worried about how massive the report is and how complicated it looks is because there's just a lot of extra stuff that we did behind the scenes that isn't important to you and your like immediate needs.
So, part of the valuation process, gathering data seems to be like a very crucial step in that. Could you walk us through the key pieces of data needed and why they're important?
Yeah, absolutely. So the first thing we always ask for is the census. And with that, that tells us how many people we're covering and helps us have a general idea of where that's going to go in the future because that's going to make a difference further down the road. So we need census information from you. We also need to know what kind of benefits you offer and cost sharing. Do your employees pay 50/50? Do you cover 100% of it? And we also need to know what kind of rates you're offering. So what plans do you have that they can choose from? Additionally, beyond that, we need financial statements for the prior years because then we can match up where they ended with where we're going to start for the next valuation. And then if you are funding in an OPEB trust, we need the most recent trust statement. We need a general ledger, a balance, make sure that those correspond to each other and that there's no discrepancies. And then finally, we need to know what kind of plans do you have for the future for your funding for your OPEB trust.
And I know you touched on it a little bit, but what specific elements are needed for the census file and why are they crucial in determining your OPEB liabilities?
Okay. So some of the basics we need are date of birth, date of hire for your active employees, because particularly in Massachusetts, but in other places as well, benefits are determined based on that hire date, how much service you have, as well as what is going to be offered in retirement. Beyond that, we need to know things like gender, the location. So are they teachers? Are they police officers? Are they office workers? Because that does make a difference. Teachers and public safety officers have different rates of retirement than a white collar worker would. We try to be as accurate as possible when we do these valuations. So that is helpful to us. Additionally, for retirees, do they have a spouse? What's their age and gender? What kind of coverage do you have? Are they in an active plan? Are they in a Medicare supplement plan? And finally, it's and some kind of identifier like social security number or an employee number is helpful to us so that we can match up your data to prior years and for future to make sure we know that this person is still with you carrying on for the next decade or two, or this person is the one that has left. So I'd say those are the most important pieces that we need on that census.
So, in terms of the financial aspects of the report, what are the main considerations that play a role in the process and how do they impact the overall valuation results?
Sure. So the first thing that we look at is the balance in your OPEB trust, and that tells us how many years or months worth of payments that you currently have. The next thing that we look at is the contribution amount. How much are you putting in currently? How much are you expecting to put in down the road? And this makes a big difference because when you're backloading those contributions, that's going to change what we expect, because what we really want to see is those current years. So if you're doing, say, post pension funding, where once your pension plan is fully funded, you transfer those funds. So maybe you're only contributing $100,000 or even $10,000 right now. And then in a decade or more, you're promising to pay a couple of $1,000,000. That's going to affect your discount rate as far as funding goes, because we're really looking in the next few years to see how much you're going to be putting in then. Additionally, what we look at the funding policy. So is all of your cash sitting in a savings account in a bank somewhere? Is it invested? How aggressively is it invested? Because again, the higher the risk on something like that, the higher your annual yield is going to be. And that in turn is going to affect your discount rate. You're going to get a higher discount rate, which will then lower your liabilities.
Awesome. Thanks again, Samantha. I really appreciate you coming on to share your expertise with us today.
Thank you.
Thanks again for joining us. And as always, if you have any questions that you'd like us to cover in the next episode, drop us a comment or shoot us a message. We'll see you next time.